Thank you, Praveena. Thank you, NPCI team and all participants. Greetings to you all. Thank you for attending this. My name is KP. You can call me KP. I am founder of OneMoney, which is India's first account aggregator. So we started the journey with when the regulation draft was issued way back in 2016. And that was the time when we started discussions about open banking, and it was fairly new to the entire country. And we've had, I still remember many of the meetings we had with the banks. Most of the operating managers at different levels are not familiar with this. They heard of open banking, but they were not comfortable at that point. Today here in April 2020, I can confidently say it has been a fabulous journey, and the change has been dramatic. It is not only that they are very comfortable. We are in a position where banks are continuously calling us and following up to set up their ecosystem for them to participate in what we call in India AA, account aggregation, synonymous with open banking. So the objectives in India, the regulation issued by Reserve Bank, which is our central bank, RBI on behalf of itself and the other three regulators, SEBI, IRDA, PFRDA, which covers the capital markets, the investment markets, the provident fund account managers, as well as insurance regulator. So on behalf of all of them, they have issued this regulation. We do believe these are the big objectives of account aggregation in India, which is data democracy. I think that's a major objective served. Then I believe sachetization of financial products will be another big objective, broadly speaking. And both of these together will reach the final objective of financial inclusion. And I'll explain that briefly here. In data, of course, you would already understand, under the regulation, every individual and even MSMEs, of course, are the king or queen of their data, and empowering the individuals and making sure that they have the ownership of the data exercised in their hands. The ownership was never in doubt, but there was definitely over a period of time some misunderstanding. That has been cleared through this regulation. So they are able to use the data for themselves when they want to and for what purpose they want. So the individual is empowered, and I believe that is a big shift in the what we call is a data democracy. The balance shifting from the corporation to the individual. The second, sachetization of financial products. We've seen some of it in the payments world and other places, and that is the route even other financial products will take once we have operating and in the account aggregation. What this means is products which are the privilege of, let's say, the middle and upper middle class, we are able to, using the data sharing models with the consent of the individuals, you are able to offer products on smaller scale, but to a wider audience. And that's what I mean. And that's where fintechs play a major role. And therefore, account aggregation becomes an enabler, both for the fintechs and the banks to transform the product landscape by making them smaller and simpler, so that they're able to, the underbanked and unbanked people today are able to access those products. And that will lead us to financial inclusion, because obviously with account aggregation, data transfers, data sharing becomes very inexpensive as opposed to the traditional methods of sharing data, either in printouts or uploads and downloads and so forth. Data is ready for decision engines, and therefore the banks or the lenders in general are able to underwrite financial product onboarding quickly and most inexpensively. That makes it easier from the FI point of view, and their quality of decision making will certainly go up a lot. And from the point of view of the product receivers, they're able to shop around and look for the best product that makes sure that the atmosphere is fairly competitive, and there is enough market play that enables more and more products that are in the reach of the masses. So that's a brief. I believe there are a few more points, but I think
sure.
I would like to take a pause here and allow moderator ma'am to go ahead and
Thanks a lot, KP. That was great. So, AA is really fintech, powering other fintechs for opportunity and data democratization. Good start and very good intro. So from here, let's move to Europe. I think this is the other end of the spectrum, the region that really kicked off this model, quite a few years back, and they've gone down this journey in a very different way from the rest of the world, through PSD2 and so on and so forth. So we've got Mr. Kannan Rasappan, CEO of Banfico. Kannan, over to you. What has been the experience in Europe? How have you serviced that market? More importantly, how do you see the learnings coming out from experiences there? What should the rest of the world take from the European experience, and perhaps what should they not take? I mean, what should they do, don't, based on what's happened with Europe?
Okay, thank you, Praveena. Hi, everyone. Yes, so Banfico primarily operates from London, and we had been servicing PSD2 or open banking, UK or European Union. Also, we've gone to a bit of Middle East, Bahrain open banking as well, and we're working on Australian open banking at the minute. Yes, so coming back to the European primarily, it started as mainly on the competitive front, saying make the banking more competitive, value to the people, and all of that, better use case. Not primarily on financial inclusion, because of the state of play in UK or Europe is. So it started as a competition. So because it comes back to the regular churn of events, and the last one was this 2008 financial crisis, and banking was actually bailed out, and regulators want this to be a bit more democratic, more competitive, and not to be bailed out, and all of that use cases they wanted to solve. Then came this regulation. So so the open banking itself is just exposing data, but one of what KP said in the first speech is the data democracy. So that's exactly what we are following here. So everything revolves around consent. So the consumer gives the consent, and then you do the account service or a payment service, and that's the main. And there's a lot of regulatory technical standards, if we call it RTS, because this is the first time a bank has ever exposed anything to the public without a bilateral agreement. So which means it's a public offering, right? So you can't stop anyone from using it, and there is no agreement or barrier. That's the main thing here. So which means the market can pick it up, unlike in other jurisdictions where like the bilateral agreements where you go to a bank, knock on their door and say, can we work together? That's not there. So here it is like, yes, this is a directive. What we have seen here is it's a pretty complex project for a bank. Okay, so strong customer authentication, trust framework, and regulation itself did not specify any standards, right? So if you have your own API, you can publish your own API. There's nothing wrong with it. But if your own API, then you don't get market kind of traction because it's a custom integration. But anyway, so the regulators did not specify any API standards. They were putting more emphasis on consent, privacy, security, trust framework, or strong customer authentication, all of this. And that's a very heavy load for any bank, okay? Because it's not just the API channel needs strong customer authentication. All your existing channels needs to have strong, like online banking or mobile banking, everything. And what means initially I started as an architect. I'm still an architect, and we I was working with the big banks like Lloyd's, HSBC, and RBS or WorldPay. And we have seen like the big budgets, big team, 200 plus people, 100 plus people, 100 million pounds, and a lot of service companies being involved. All of that is good. They were able to do the project in good, even though there was delays, they're still kind of fixing it. We started as something, what can the small banks do? The small bank doesn't have the deep pockets. Okay, how are they going to meet this compliance, right? So we're talking about less than 500,000 euros or dollars, you could say. All of them, pretty much tier 3, tier 4, or tier low end of the tier 2. And that's where we come and help. And again, it's not compromising quality or anything like that, because they're being audited, they're being kind of tested, conformance testing, a lot of those things are there. So that's where we help the banks to expose the APIs. And a lot of the banks don't have the resource. So one of the main problem what we have seen is 400, probably including the electronic money institutions, there is like around 10,000 entities who wants to do this open banking within, like, leave the 18 months timeline given, because a lot of them woken up only in the last 6 months of the deadline, right? So suddenly there's scarcity of resource, there's scarcity of everything, right? So and then the deadline has been extended by FCA for 6 months only on the API delivery. So there's been a lot of those lessons learned, which means the banks are not equipped enough to do this modern API program. So open banking is an API program at the high level, right? So yes, strong emphasis on security, identity, all of that. So that's where the market, but then the fintech are equally regulated, right? So I just talked about the bank, but now let's come to the fintech. Fintech are equally regulated. They are the other side, flip side of the, like, consuming the APIs. We didn't see a lot of traction apart from the what to say, publicity or marketing or all of the PR that you see on the media. I didn't see a lot of them in the market. They are getting there, but it's not there for any weak-hearted fintech, right? So if you have people of two people, you think you can become a third-party provider, which is the fintech, it's difficult. It takes a significant cost and expertise to navigate through this regulation and put yourself in the, because you're going to be authorized as a PSD2 entity, so you'll have to go through the audits and everything. So it's happening. The lesson is it's happening, but it's going at a slow pace. We think it will pick it up in another year or so, but we have to just wait and watch. And there is, let me also quote this point. There's no return on investment for the banks as such today, okay? So they have to bear this in mind. It's a compliance program, it's a regulatory program, all of that. And it's a competition, kind of improving the competition. So the big 10 or like CMA 9 banks, we call the top 9 banks in UK, most of them had this behavior saying resistance, right? So they resist. Okay, they resist this regulation. They do the incorporation. Then comes the incorporation, saying, I'm not willing to cooperate with this. Okay, and then they come say, there's no other way. They say, okay, let's accept it. Okay, so then the acceptance came at a very late end. Okay, then came the embracement. So the banks are actually evolving as well in their attitude, saying, let's embrace it. Okay, so now comes the competitive ideas and strategies in the digital transformation, all of that. And that's the UK picture. Thank you, Praveena. Sorry, we can't hear you. Sorry, are you on mute or?
I think you're on mute.
Yeah, so back here. Thank you, Kannan. Thanks for that, and a great point you made there about what's in it for the bank. In a market like Europe, where it's not so much about NII account, but really a very fee-oriented market, the dynamics will tend to be very clear, very different. Fintech needs to have its P&L, the bank needs to have its P&L. So we'll come back to a little bit more on that discussion. So Musheer, I'll bring this to you. I think Musheer used to be the CEO of the FinTech Association of Hong Kong. We know each other from those days. Now he's speaking to us as CEO of FinStep Asia. Has a good perspective of what's going around Asia from digital banking, API banking, and all those spaces. So Musheer, over to you. What are you seeing in outside of India, the rest of Asia? Korea, for example, came up with this, very early on in the life cycle, had a very, different model. I know recently other markets like Hong Kong, Singapore have done something. So can you run us through how Asia looks at this point?
Thanks, Praveena. Great speaking to you again and all the other panelists. Dialing in from Hong Kong, where we have kind of started to normalize in COVID-19. And also with regards to the open banking environment, I think Hong Kong has had it as part of an overall strategy. So I'll talk a little bit about Hong Kong and then spread out with regards to rest of Greater China and East Asia. So the Hong Kong Monetary Authority, which is the RBI equivalent for Hong Kong, had initiated a smart banking initiatives in 2017. 7 of them were initiated, and primary of which was a faster payment system for instant payments across peer-to-peer as well as peer-to-business. And secondly was virtual banking, which is an online banking, completely online, full banking license. Unlike payment banks in India, this is a full banking license, but with the restriction of no physical branches. And number 3 was the open API frameworks. And for the open API, they had 4 phases in mind. Right now we have completed 2 phases where the first phase was just like branch locations, etc. Second phase was products, so client acquisition. And phase 3 is going to be about client information, right? Now, unlike in the UK, where Kannan was talking about how FCA approached it, Hong Kong has approached it with the perspective of saying, here are your phases, here are your deadlines to achieving those phases. And we would like banks and the fintechs to work out the frameworks, what is called the common baseline. So the Hong Kong Association of Banks, which is an association where a majority of the big banks and smaller banks are set up together and act as a semi-regulatory body in terms of helping the banks set up their frameworks, has been working with us as a FinTech Association to help build these frameworks and go back to HKMA. So points like security, standardization, etc., are pretty major points of discussion, and it's taken 6 months to come to phase 2. Right now, the discussions are stuck on when they're moving forward with phase 3, in particular on data standards and the security frameworks, because liability is a major issue when you're talking about open banking between banks and with the fintechs when it comes to customer data, right? So if there is a breach of data or there's a hack, who's held liable? In general, the banks are likely to take a bulk of the impact when it comes to image, because they're more well known than, say, the fintechs necessarily. So it becomes very important for the banks. Having said that, the banks in Hong Kong, especially the incumbents, have opened up to open banking. A majority of them have their open API portals set up for participants to access it, and are also already starting to work on a one-to-one basis with a few fintechs. Now, the second part, which is the virtual banking in Hong Kong, which is a very important piece of how open API is being driven, is the licenses have been issued to 8 entities, a majority of whom are joint ventures between either large banks and technology firms or tech fins such as Alibaba, right? So to give an example, Livy Bank, which has Standard Chartered as one of the major shareholders, along with PCCW and Hong Kong Telecom, and C-Trip, which is effectively the Make My Trip equivalent, which is run out of China, right? They have come together to offer a lifestyle type of a bank, right? And their open APIs and open banking is going to play a very important role, because it's drawing in from data that comes from a telco, drawing in a data from a aggregator in terms of travel, and then the banking data that comes in to offer better services, right? And that's something that we're seeing across all the 8 applicants. Having said that, there are 3 of them which are standalone, one being Ping An, second being Ant Financial, and number 3 being VLab. All the others are joint ventures, including one between ICBC and Tencent. So one of the world's largest banks by assets, and Tencent, one of the world's largest technology firms, right? So the interplay here is effectively driven through open APIs and open banking, because once you're online completely, you have to interact with the ecosystem. So a majority of these banks are working on building their open API and open banking frameworks, right? Now, across Asia, if we take an expansion to that, you're right, Korea had started off quite some time back, and Japan has also looked at it for a while. You've had internet banking, for example, as a standalone for a few years there. Mainland China has had that for quite some time as well. But the regulatory approaches have been mixed, right? Ranging from the likes in Hong Kong, where the regulator has a say on the cutoffs and trying to not necessarily influence, but guide both the banks and fintechs to achieve collaboration. And then on the other hand, you have the MAS in Singapore who have gone ahead and set up open APIs and said, here you have the portal, everybody can access through a single portal, right? And encouraging the banks to build out. And you have them supporting APIX platform, which is to build the overall ecosystem in ASEAN in particular, but extending to Hong Kong. Australia probably is taking a slightly more aggressive route when it comes to the region. It's not only limited, and they're not looking at open banking only from a financial services play, they are making it broader in terms of open economy, right? So integrating things like transport, etc., into this open API frameworks and open banking is being driven through Australia there, who typically tend to be fairly on par with the rest of the region or ahead when it comes to technology implementations in fintech. So I would say it's a mixed bag, but overall very positive towards open banking, because everybody realizes that models are switching from physical to online models, and the ecosystem play with the tech fins in particular leading things in Greater China becomes important. So yeah.
Fantastic, Musheer. I think you made some great points. It's while we use the word API banking, that's really the open banking or API banking is the enabler, but it's really the services and the use cases and solutions that are built on that enabler that are going to be the critical success factors. So is it, and I love the example you gave about open banking and ultimately open transport, and that really takes it into a completely different realm and a different space. But even if we limit this discussion to open banking, it still needs to serve a purpose. Is it around giving access to better credit? Is it about just somebody wanting to have information in a way that's cool and easy and instant, or is it something else? So I think one can cut the length and the depth and breadth of this in the array of services, and that ultimately will make the difference in terms of what the business model is. So let's jump to that, and I'm Amit, I'll invite you to join in. Amit Goel, co-founder of MEDICI. They're one of the very large events globally. Amit, great to have you here. So Amit, if you, from your experiences and what you have seen in different markets, and take your pick, what kind of applications around API banking have really worked? What have fintechs done? What are good models that you have seen that you'd like to talk to us about?
Right. Thanks, Praveena, and good to join this conversation along with all the other panelists. Let me just give you a little bit background on the US market and which we have not talked about so far, and then maybe I'll do a little bit of comparison from what we analyze at MEDICI. So very interestingly, there are two types of markets that I see from an open banking perspective. One are those which are driven by a mandate by the regulator. So there is regulation. And then there are others who either have not decided, or even if they are having discussions, they have not have a regulatory mandate so far. So it's a market-driven structure. So US, tends to be in the latter category. So they don't have a mandate today. Just like payments, they seem to be pretty far behind, in this sense. Now, on the other hand, data sharing has been happening in the US for the longest time ever. So, all of you will recollect companies like Mint by Intuit, or, Udly, which is a very big company globally in this space. Also a recent success story of Plaid, which was acquired by Visa. So just like, what US is really good at, they create very large scalable companies which are valued very, very, highly. So they have those companies, the data sharing has been happening, but there is no PSD2 equivalent, there is no GDPR equivalent in the US. So what has been happening is that Consumer Finance Protection Bureau and NACHA have come up with guidelines for open APIs, and a lot of banks have been following it. At least I would say the top 10 banks, starting from Bank of America and all the way to Keys Bank, the top 10 basically, they have open API initiatives. But if you look at these companies that I talked about, right, like whether it be Mint or Udly or any others, they're mostly using, for a very large part, they are using screen scraping and APIs wherever they are available. And I think screen scraping is, the most insecure way of, sharing data. So open banking can really help in a very security-driven way, in that context. And one of the things that I feel is that, since, it's like the UK market seems to be, just in terms of the volume of API calls that have happened there, or the number of participants, third parties, in terms of PSPs and ASPs, it seems like the mandate-driven approach that they have taken is kind of, very, very, very interesting. In terms of the applications, that you talked about, I think we are seeing 2-3 different types of applications broadly. One is that, there are a lot of savings product that we are seeing. So there is a company called Chip in UK, which is doing very well. So, you can basically take a picture of your debit card and you can sort of, enroll in the program, but you can do a deeper integration by, using open banking platform, and then you can connect all your banks. And then basically, it starts saving money for you. They have an AI-driven engine, and it works beautifully because of the API access to all the banks which have been mandated. Kannan talked about the CMA 9. At least those banks are there, and there are others who are taking initiative. So those are one type of applications of savings products. We have also seen personal finance management applications, across the board. I think one of the issues is that for last so many years, each one of us, I'm very sure, has been trying to connect all our cards and bank accounts. But, most of the time it is like, they ask for the login, and, basically it's a lot of screen scraping and all that. So one of the perfect applications, I think, of open banking is PFM. If you can actually connect your bank account seamlessly, and then the information can be read, and, an overall dashboard can be created. I think that is one single biggest inhibitor of PFM so far, in markets like India. We also believe that credit could be a very, very big application, especially the lower strata of consumers as well as businesses, where broadly the credit has not been available to the extent it should be. And if you are able to utilize data from the accounts, and in India, obviously account aggregator model is supremely ahead of everything else in open banking globally, where they have brought in, the mutual fund industry, the PFRDA, the pension funds, insurance, everything, right? So even in the UK, I think all of these are not there as a part of the whole equation. So if you're able to pull in all of this data for consumers or for businesses, you will be able to underwrite so much better. And so we feel that a lot of good credit applications could be expected. And at the end, I would just say that one very interesting thing, just in terms of comparisons of market, is that Japan, Australia, UK, EU basically have taken a very mandate-driven regulatory approach. I think everywhere else it is a market-driven approach. But one more thing that we found out was that if you look at personal data protection and privacy laws, right? So we think that there is some sort of a parallel between the two. So if you look at markets like UK, the GDPR and PSD2 went sort of, in parallel phases. If you look at Australia, CDR and open banking went hand in hand. I think in India also very interesting with personal data protection and initiatives which are happening here with account aggregation. But I think if you look at the US market, they don't have an equivalent of GDPR. So I don't know how they sort of look at a federal way of data protection and privacy. Because when you look at open banking, when you will ask the consumer to share the data, you need to have a very solid framework for data privacy and protection. So I feel those are the areas in which you can compare markets.
Thank you, Amit. That was great. you brought it out nicely. I think we covered US. So with that, we pretty much covered, all the spaces where there is action happening. Micro savings is something that doesn't come immediately to mind. You brought that up as well. And, I want to now bring this back to India with Anish, Mr. Anish Achuthan. So Anish is CEO of Open. And Open is really about SME banking, providing services to SMEs. So Anish, can you run us through your perspective on open banking and how really has that gotten into Open, from a business model point of view? What, in your view, are needs of SMEs? When we talk of open banking, we typically look at it from the perspective of the individual. So how has it worked from the perspective of the SME?
Thanks, Praveena. So I'll probably start with a brief about what we do and how probably we accidentally discovered this terminology called open banking or API banking as we actually started. So we started Open in 2017 on the realization that business banking is broken for small businesses. They struggle a lot when it comes to tracking cash flows, in terms of dealing with multiple interfaces for managing their accounting, their invoicing, separate payment gateway. And then we also realized the needs of this new age or the millennial entrepreneurs have evolved a lot. For example, if today Bhavish Agarwal is setting up an Ola, he may wanted to programmatically pay the drivers the moment their IDs over. And we realized that there is a lot of gap in that market which is being not addressed, especially towards the small business segment, because even though banks used to have transactional banking solutions for a very long time, they'd always been focused on the mid to large SMEs and the enterprises. So we realized that if by offering a current account and if we can exactly track where the money comes from and where the money goes out, we'll be able to automate a lot of their income, expenses, and bookkeeping. And if we can also provide them with the additional tools, built-in tools like invoicing or ability to connect with their existing accounting systems, or even APIs that can add a lot of value. Now, the challenge was that when we actually started was that none of the, we realized that banks have its own challenges probably, and this is not a segment that at that point of time were not of key importance to the banks. So that's a time when I actually started looking at the Europe and the US market. So came across a lot of these fintechs like Simple in the US, which is actually built a consumer banking proposition without a license by riding on a partner bank. Or when it comes to markets like UK, there is like Tide or Holvi, where they would actually work with a Barclays bank or probably a Solaris bank as a backend and build an entire bank without a license. So we thought like that's probably an approach we could actually take for the Indian market. So that's how we got started. What we offer currently is like a business current account along with all the integrated tools. We issue a debit card, we issue a credit card. We also have inbuilt tools for payouts in terms of automated bookkeeping engine that helps businesses to automate their bookkeeping. And we have a suite of APIs. Now, how we typically operate is that we built our infrastructure on top of an existing bank's platform, which is a sponsor bank, wherein the front-end experience is done the same way like a PhonePe or a Google Pay actually does it for UPI. So we always think of ourselves as like a PhonePe or a Google Pay for business banking, wherein the partner bank actually takes care of all the the customer funds, the money management, etc. Now, the biggest challenge as we actually got into, we faced was that one, probably this may not be relevant for today's session, but getting access to the first bank or the second bank was the biggest challenge. But even after like when we start working with the banks does not have all the APIs basically. And in terms of from the compliance as well as the operations, each of this bank has its own view on which means like we didn't have a open banking standards. But over a period of like the first 1 year, what we have realized is that there's a lot of, as like Amit said, there's a lot of market-driven initiatives which banks have set up in India. And I believe like some of the banks in India have, much better than their peers, maybe in the Europe or US, in terms of setting up their own business unit just focused on banking as a service or API banking, where we currently work with close to around 15 plus banks. And I can confidently say that most of the banks have actually started working on exposing API, the sandbox, these things generally for fintechs. And so now coming out of Open, generally what I wanted to, and before that, I just wanted to, so currently we have some numbers about open. So we currently have around 450,000 SMEs on the platform. We manage around close to 5,000 crores in current account deposits. And annually we process close to 10 billion US dollars of transactions. While Praveena, you asked about the SME segment and how open banking is important. So what we have seen is like this concept of embedded fintech or banking. It's not only the fintechs and the banks which actually wanted to use open banking to build services. What we are seeing is that even from small businesses or even an FMCG distributor who wanted to actually automate the process of doing payouts or programmatically control their banking applications, or cab sharing company wanted to actually issue their own credit cards, or a lending company wanted to do it. So we are actually seeing a lot of these use cases emerging. And the good part, what we are seeing is that at least in India, I believe, like, even though we don't have standards, regulations, every bank has its own set of APIs. The go-to market can depend from 2 years to 3 months, depending on whichever the partner bank. But it's evolving, and the need from this corporates as well as the SMEs, little bit evolved SMEs and the developers are actually increasing. And the entire suite of APIs, it could be making payouts to a UPI or an NEFT or an RTGS or issuance card. That is a need which we are actually seeing from the market. And one more last point, when we talk about open banking, what we have really seen in the markets like Europe and US is that even though it is some markets like Europe, it is driven by the regulator. It's really the smaller banks or banking as a service focused banks. For example, a Solaris bank, which actually started as a startup and fully focused only on exposing APIs. Or in the US, if you actually look at like a smaller bank like a CBW bank, which actually started exposing APIs, they were actually able to create a profitable business model out of banking as a service. So I really believe that banking as a service, apart from rather than like forced by the regulations, there can be multiple business opportunities for financial institutions if they're able to rightly position it or package it or tap the opportunity.
Europe has been moving towards making the competition in the market, making not just the big companies doing all that, like economic activity and all of that. So if you look at the CMA 9 banks, the not even 9 banks, the 5 banks control around 85% of the population in terms of all of the things. Okay, from accounts to payments to processing and everything. And if you look at the card industry, there's only 2 players, credit card and MasterCard, and then a lot of acquirers. Okay, so this is what the regulators wanted to kind of fix. Okay, so this ecosystem is biased. Okay, from policymakers to the business to the sales and people on the ground, everything is kind of a bit broken, I would say. Not broken. It's kind of done in a way that's not very healthy for a market. Okay, so here it started as a mandate, which means if you allow them to operate as a marketing or market-driven initiative, it won't work. Okay, so they will kill all the fintechs, they will kill all of this. Okay, so for instance, even the screen scraping, and they wanted to kill it because they don't want to deliver the APIs, they want to kill the screen scraping and protect their business. And that's from top down, right? So from the policymaker, from the MPs who get lobbied to the common business who employ 100,000 or 200,000 workers, everyone is in this mindset. So the regulator kind of came in as saying, let's fix this. So it's kind of saying, do it, otherwise you get penalized or you get an enforcement action. So for this kind of market, especially for the developed countries where like there's so much saturation or amalgamation, and it's only few players making the business activities, enforcing it as a mandate will work, and that's the objective, right? But in some other countries, we have seen it as a financial inclusion, right? We also did something in Middle East for Bahrain open banking. We have delivered to 2 banks, and there it's a bit more of financial inclusion. They want their people to become smart city and financial inclusion, innovation, and all of that. So There it's a bit different. And again, if you go to Australia, it's mandated, saying it's still mandate. But Bahrain is still mandated, I would say. But that's how it kind of works. But if you look at India, you don't have influence of Visa and MasterCard. RuPay and UPI is the leaders, okay? So, or will be the leaders, and there is no kind of investor or what to say, the shareholder driven or the capitalistic kind of a mindset, right? So these are all the markets driven kind of initiative that RBI wants to bring to the ecosystem. And there it will work because people are trying to be more competitive and people will adopt, even though we have not gone through a lot of phases of digital innovations, but we are kind of slingshotting our way to be the leaders in this market. And these are all happening because of the market-driven initiatives. So that's what I would think about, whether it's a market-driven or it's going to be a regulatory-driven. On your second point on consent, I think it's, I can't remember. Is it? Okay. So, like we said, it's GDPR that went in very well with the PSD2. So the regulation happened in kind of a from 2008 or from even 2000. A lot of regulations are coming in to protect the consumers. Okay, to protect the consumers' money, to protect the consumers' data, all of that. So GDPR kind of is a crown in that aspect, saying this is the best data sharing or GDPR or Data Protection Act in the whole wide world. So they said consumer own the data; they have access to all of that. Okay, so the consent in PSD2 is a little bit different. Okay, so the consent of GDPR and consent of PSD2 is a little bit different. But let's talk only on the PSD2 consent or the open banking consent. This is more fine-grained. Okay, so who has access to it, when, and all of that. And consumer should have access to all of this, and he could go and revoke those consent. Okay, and then the consent is not indefinitely given, right? So it's for payment, it is an atomic consent, which means one time, that's it. But in the account sharing, it's for 90 days. It is said could go for 90 days, but this is where I would say some cooperation by the banks, right? It says 90 days maximum, right? These days, I've seen banks arguing, we will only give consent for a day. Okay, that's what we would give. Okay, not 90 days, because we can read through the law and say it doesn't mandate us 90 days. So you see that kind of a discussion. Like, we are part of an association called F-Data, who are leading the efforts on behalf of the fintech world, and say this needs to be corrected, or this needs to be kind of put forward to the regulators, and then they need better clarification, and they should give for maximum, like the usual 90 days. So this 90 days you have some control about, right? So some of the screen scrapers some screen scraping was banned in few geographies because of the load that they were putting onto the banking infrastructure, which was a bit fragile. So unlimited times you can go and scrape and put load and all of that. So in API world as well, it's all happening, right? So if I say, this is not related to the topic, but I would say a lot of the big banks have to do a quick remedy to their scalability, because the volumes are growing and banks have built a rigid systems where some of the aspects of their infrastructure is not scalable. Coming back to here, so how many times are you going to give access? So regulators said 4 times, but if the bank and the third party and the consumer agrees, they can give more consent to access more times. So that's the consent. So consent should be something easily manageable.
In India, the way it has happened is RBI has issued a regulation, which everybody is aware of, but it has not mandated the banks. So saying that you must do this by so-and-so date, like UK did for the 9 banks or whatever. Having said that, the language in the regulation is such that if you participate, you have to participate within those rules. And my belief is that I've approached many banks, and I've been in this journey for the last 3 years. Some of the banks have misunderstood the language to be a mandate, which works to our advantage, right? So therefore, we're not really, removing the misunderstanding. Having said that, the driver is not that misunderstanding. The driver is the big banks have taken a call saying that this is a good thing for the society. There's a round table, and I can actually take the name because, okay, it's informal, but I'm proud to say that, there's an informal round table of the big banks chaired by very eminent, chairperson of the largest bank. So, ma'am has actually taken a good initiative, and they all agreed on 2 things. One, we will participate in AA because it is good for the Indian society. Second, we will not charge for giving the information. By the way, I don't know about the other ecosystems as much. In India, RBI has regulated everything but pricing. They said we leave the price of AA services to market discovery. So therefore, FIPs, their role as FIPs, obviously, I think by now everybody knows FIP and FIU, financial information provider and financial information user, are fungible, right? The same organization will be both. So therefore, FIPs have taken a decision that they will not charge. With these 2 in place, it has been a great journey. We've gone forward. So I think it is what it is now, whether you term it as a mandated, semi-mandated approach or market approach. I think it has been successful because we are now at a stage where we are about to go into production. We were actually going into production sometime at end of March or April. But unfortunately, because of this situation, it is now delayed to maybe June. So once we go into production, our expectation is that once all these large banks, including the State Bank of India, have participated, the other banks will fall in line. And I already have the indication of that, as I mentioned at the beginning. Banks are calling us saying that we want to participate. Can you help us? How do we get in? What do we need to do? Now, in terms of the consent management, I heard what Kannan said. I think there's a different perspective in India. First, I agree with him. Yes, as you dig deeper into consent, it can get complex, especially for MSMEs where there are partners. There can be differences of opinion, and there are agreements between the MSMEs and as to who can authorize what and so forth. But leaving that aside, broadly for the individuals who bank and do other things, I think the consent management framework laid down by Reserve Bank of India through its technical arm and published by Reserve Bank and endorsed by Reserve Bank is very, very standard. I would say excellent, and it puts the power in the hands of the individual. Now, 2-3 things here. One is you can revoke a consent, and which I think Kannan also said, yes, we can revoke a consent. Can you modify a consent? You can actually modify a consent request. So it goes in 2 stages in India. One is, an FIU, an information user who's trying to provide a product, asks for a consent. So that's a consent request, and the individual can actually modify it at that stage. But after giving the consent, modification is not possible, as Kannan said. Even here, we can revoke it. And the power of revocation lies with the individual. There have been discussions in some quarters saying that we should have something called an irrevocable consent. It has not been done. I do not think RBI will do it. My own personal opinion is that we should never ever have it, because that can again dilute some of the power the individual has. Therefore, we are fairly clear. We have not reached the stage of confusion because we have not gone into production. At this point, Praveena, I want to just make a couple of points. I think there are some questions here which are very basic. I will address only the quick points. somebody was asking a question, can we merge AA ecosystem and open banking? I just want to clarify to everyone in the audience that this is just nomenclature. I mentioned right at the beginning, open banking is the phraseology used in Europe and other parts of the world. Account aggregation is the AA, as we call it in short, is in India. They're synonymous. I'm not saying they're identical. The approaches are different in different regions, but you don't have to worry. There is no merger, and it is not that we have AA but not open banking. That is all not correct. We are talking about open banking or AA in the same breath. It's one and the same thing. And secondly, someone was asking, when will it happen? Can RBI do something? I mean, there's some, I think, slightly long-winded questions. The simple answer is this: the regulation has been in place. We have tested with about half a dozen large banks, which covers about 60% of the customers, and we will go into production. You will come to know what is account aggregation, and you will enjoy the benefits of it pretty soon, hopefully in a couple of months. But let's see, that is just subject to.
I want to take this to Amit. Amit, few questions here in terms of around the world, as well as what we may see as behaviors in India. What's the role that smaller banks are able to play? Everyone keeps focusing on the top 10 banks, the top 8 banks. KP told us about the banks that cover the top 60%. So what happens to customers of the smaller banks? Do they lose out on these opportunities? Is this relevant for early stage fintech? I think these are some of the questions that are coming up as well. And I also want to add a part B to that in terms of business models. So you spoke about some interesting use cases, applications that you've seen. In these business models, machine learning, AI, if you can just talk us through examples of some of these models that have also worked.
Right. Thanks, Praveena. I'll keep it short. I think on the small banks, what we have seen, especially in sort of market-driven places where open banking is happening, say, for example, in India, we saw how banks like RBL and Federal Bank and Yes Bank actually took a lead very early on without any regulations, without any account aggregator framework. They said, this is an opportunity actually to sort of create banking as a service, create a new business line, and success, especially on the payment side, doing that, also enabling some digital lending companies. I think Anish also talked about the US, where there's a whole host of banks which have been sort of powering fintech companies, and that has really helped them, be relevant in the market. So I think there is, the market challenges are always there from, being a smaller bank as opposed to a larger bank. But I see it as an opportunity for small to mid-sized banks, and that's kind of my take on this. I also just want to add one more thing before I answer your next question, that I feel very proud that in my mind, I think at least when it relates to payments, in India, I think we have the largest and the most successful implementation of open banking in the form of UPI, which NPCI, your organization, Praveena, has enabled. The way it works, the volume of the transactions, the way the entire market, including fintechs and tech companies, have been enabled by that, it is sort of phenomenal, right? And if you see UK or EU, basically their open banking framework today has payments and it has accounts, bank account aggregation. Now with AA in India, I think we are going even for many steps ahead by including mutual funds, pension funds, and insurance. So very exciting, to see what could happen in India. Now on the other side, you talked about what kind of machine learning models and how AI could be used. What are the possibilities from a fintech perspective? I think one of my pet peeves has been that with all the talk around fintech sort of disrupting banks, we have still not seen it happening, over the years. Primarily because the promise of fintech was that we will be able to run these, machine learning models, and the biggest gap has been data. So I think because we talked about screen scraping. We talked about how difficult it is to do one-to-one contracts with banks and obtain data, how long it takes, 12 to 18 months. I think with open banking, with the data available from the providers in a machine-readable format, with the availability of more data, I think that's where the magic starts with, what are the possibilities, especially, if I go back to my examples, how can you do better underwriting if you are able to access data from your accounts, from your GST, from the transactions that you are doing, and so on and so forth, right? And similarly, in terms of savings, if you could get access to all your bank accounts and see what is your position, and then compare it to the benchmarks, right? So, for example, Chip is actually able to benchmark it against millions and millions of transactions and accounts that they have seen, and they then say, what are you able to afford to save? And then their AI model is able to kind of create those models. So I think with the availability of better and more data, the possibilities are actually. So now, actually, I feel that we have been saying it for many years. We started tracking fintech from 2012, but I feel that every year we come back to it and say saying that this is the kind of the perfect storm for fintech. And if open banking is implemented in a good way across the markets, it will be a big boon for the fintech industry.
Thank you, Amit. So, Amit, there's a question for you. What effect will open banking have on payment acceptance? I think this is around the interplay between payments and open banking.
Right. So I think the best example of this, what effect open banking will have on payment acceptance is, in India with UPI. I think what UPI has opened up in terms of, QR codes and several other forms of accepting payment like, AEPS and others is a classic example of what it could do. Some of the main objectives of open banking, I think, as they described in PSD2, was that how can you lower the transaction cost? How can you lower the data sharing cost? How can you make it more democratized? I think all of that has been achieved by bringing UPI to payment acceptance. And I mean, if you have to study one model, I think this is where it is happening.
Another follow-up question: are there any global API standards for open banking? I think we know the answer to that, but I'll leave that with you, Amit.
Let me go first on this. So unfortunately, there is no global standard for open banking APIs. In fact, even within EU, there are 6 different standards. So there is a group which met in Berlin. So there's a Berlin kind of standards. French guys, as they always do, they have their own stat. Then UK came up with their own. Poland has a lot of developers, so they came with their own. So they're like 6 different ones. I think the European Banking Association said that let's create an umbrella, structure so that we can sort of bring some sort of standardization. But I think so far, every country, every region is kind of coming up with their own, with some sort of modifications, customization. So I think there is no global standard today.
Okay, so Musheer, there's a question for you. What are the top financial products being distributed through open banking globally? Have you seen distribution models? Anything that comes to your mind?
I think it's some of the ones that you see from an open banking perspective, depending on how you define it. When I say defining it, meaning regulatory-wise or banks just coming there, loan disbursement, I think that's one we can see. Amit also mentioned about lending will be a major piece for open banking products. Secondly, on an extension of that would be credit cards. That's one of the earliest ones that everybody probably saw was an aggregation of credit card features, and you continue to see that coming through. What I see that is going to be more exciting going forward, potentially from a distribution model, is going to be on the wealth management front. I personally believe that robo-advisory globally has not been as successful overall, and a combination of a PFM with wealth advisory could be something that could be seen from a distribution perspective. So what India is doing with bringing in mutual funds and others in the open banking world makes it very unique as compared to other places. And that could be something that we see as an interesting new play in terms of distribution. So whether we'll be able to distribute mutual funds or wealth management products would definitely be of interest.
Okay, so I think I'm going to pick off some of the questions we've received. We have another 10 minutes to go, so this is open to anyone who wants to take it. A lot of big banks have legacy infra, and that's the biggest bottleneck in adopting to open banking. How do you tackle this challenge?
I can take that. So that's well said. A lot of the banks have legacy infrastructure, and open banking is more modern, API economy driven, modern aspects of everything, right? So that is certainly a bottleneck. And what we have done in a lot of the integrations with a lot of the banks, for them to be API ready, is the bottleneck is the core banking integration. So how do you integrate and that legacy? Obviously, this is just how do I say, just to put a wrapper and give them an API, but then the underlying problem still exists. So if the load picks up and if there is any failures, then banks would look at refurbishing their core banking. So, but they won't do it now. They will, because the volume of open banking for the smaller banks is very, very less. I would say negligible for the small banks. The top 9 banks or the top 5 banks get all the load, and the small banks don't. So, but if it comes to a situation where they are failing, then they will refurbish. But again, open banking gives them a nice opportunity to refurbish, right? So because you could move all your customer channels to API, so even the internet banking can come through the API channel rather than just only for the third party or the fintechs to consume APIs. You can build your own mobile banking or voice banking or everything to come through APIs. In that way, you kind of remove the dependency on the core banking. So now the core banking is kind of abstracted, and it can be refurbished with, yes, there is some dependency and regression, but it's better managed that way.
Praveena, if I may just add one point from the Indian perspective, the top 6 banks that are participating in our AA ecosystem right now are pretty good. We have not seen any challenges. And in this, if I may pay a compliment to the host, NPCI, it is because of your payment systems and UPI being so popular that I think to just the API infrastructure is already pretty well developed in the banks. So that has come in very useful for the ecosystem. I haven't seen that as a complication at all. However, going forward, the banks down the road, the smaller banks and the cooperative banks, which is what we should bring into the fold to expand this into financial inclusion, which is a great objective. There we could definitely face challenges because their banking systems themselves may be primitive, but that's down the road. To initially establish AA as a model, I do not see too much of a problem. We've had great support from the banks that are participating.
Thank you. Thanks for that. So I think there's also some questions for NPCI. So I'll just take a minute on that. I think you rightfully said that banks have gotten familiar and built the infrastructure required for APIs, and they've leveraged UPI as one of the success stories. So it's given the ecosystem some confidence in terms of how to proceed. NPCI also runs what we call the API accelerators. So the API accelerator provides the APIs for all NPCI products and creates a sort of single platform link with the banks. And there are a number of fintechs that use the API accelerator in a sort of sandbox environment in the NPCI Innovation Lab. So there were some questions on that. So I think this is NPCI's sort of support from a API banking perspective. And I also want to just add here that while we have fantastic participation and the panel has had some great points, the market is still some way to go. So we have Aadhaar on one side, much spoken about, great success story on identity. We've got UPI thanks to great collaboration amongst banks, fintechs, and the entire market. in terms of not just, and it's not just for few large banks. It's 150 plus banks who are enabled on UPI, so it's rather deep. Of course, if you take a product like RuPay, it goes all the way to 1,100 banks. So that's sort of the opportunity suite that exists in the ecosystem. And with the AA model, whether one takes the route that Anish has taken with Open, or whether it's the AA model, I think the market will speak for itself. We had some great examples here in terms of what's happening in the US, what's happening in Europe, in Asia. And we started the discussion with where we are post-COVID. When we are saying everything we want with less touch and be socially distant. Don't visit my office. I don't want to necessarily be exchanging a lot of papers with you. We Amit defined it perfectly as the perfect storm. I mean, there is no better time than now to really enable the ecosystem end to end with customer experiences and journeys that are digital in nature, and API banking is going to form a very, very important part of that. So we'll just take one sentence from all our panelists. So if there is one thing that you would really like to say to close the discussion, it could be a what next for API banking, or one key takeaway that you would like to leave to the group, something maybe that we didn't cover in the discussion. We'll just go across the panel for one last statement from all of you. Amit?
Do you want me to start? Yeah, sorry.
We are having some closure remarks here, the last round. So just 2 minutes from everybody. Start with
so let me go first. I am KP here. So thank you very much for the wonderful seminar. Here, my closing remark is that I think there is a lot of probably misunderstanding. Account aggregation, open banking are the same. It is very much taken place in India, and it will go live in a couple of months. It's a great opportunity. This is the right time for fintechs and other people to join and participate. It is a journey. It is not a one-day event. So I think we have the necessary infrastructure to have the first round of game very well. Thank you.
Thank you. Yes, Amit?
Yeah, I would say in terms of what to look forward, I think once the rails are in place, for open banking, it would basically open up, it would address the credit penetration issues, a lot of tertiary benefits. Somebody asked about payments and payments acceptance. I think once we get the merchants to start accepting using some of these APIs, what UPI is providing, then basically we make them digital. And once they go digital, there is more credit available to them. You can do real-time settlement for the merchants. That's so good for their working capital requirements. I think this also then proliferates into other sectors. Usually financial services is one of the first sectors to see, open banking, and these principles can then, go to telecom, health, education. I also see financial infrastructure API companies and financial infrastructure APIs as a very good growth segment. And obviously, we will find our balance between, customer experience as well as security. So I think that's the big fight, the balance that we have to find. So as long as we are able to kind of, take all these opportunities and do something good with them, I think we are going in the right direction.
Thank you. Anish?
Yeah, I think open banking is for real, and this is actually the year for fintechs as well as the banks to start capitalizing in this opportunity. New business models can be created. You could be a banking as a service platform. You could be a player who would be helping the banks to set up this open banking. You could be an account aggregator. You could be actually the one who's actually creating a consumer or a B2B play on top of it. So everything is coming together, even though we still have the challenges. So actually make use of this as opportunity is.
Kannan? Kannan, you're on mute.
Yeah. So I would say, I think looking from the audience, or is most of them are fintech, I would say don't go and build a vanilla use case of what is there in the market. Okay, and also targeting consumers, right? So consumers are, there's no loyalty. I mean, I'm saying there won't be any loyalty. Okay, that is a normal. Okay, Google will come in and wipe things off and things like that. And if you need a steady business and to build something, start small, start working with a bank. I would say just go to the bank and see where you can help them to improve their process, innovation. Innovation doesn't mean building a new product, even an existing product, which you can make it better with the APIs, work with the bank. And sometimes I feel like it's India. I run a startup in India as well. So it's more about investor chasing exercise. A lot of them do, but don't do that, and just go and find a bank, solve the problem. If you solve someone's problem, there could be hundreds of problems. Don't be obsessed with a product that you go and build on your own and then go and find a client. Okay, and this shift could happen because banks are willing to work with you, cut down the cost, and bring some cool offering. They want to improve their business line. But if you're just saying, "Oh, I will give you this," but there's no return on investment, no one will entertain you. Yes, yeah. So look at the problem-solving area first, and then see where open banking can fix that product for you. Yeah, that's it for me.
Thank you, Kannan. Very, very useful piece of advice. I think we started off saying we'll ensure we set expectations, and that's what you've done here for us. Musheer, you're going to close the panel for us. Over to you.
Thank you firstly for Ayman and your entire NPCI team for having me on here. In terms of closing, what I would like to say is I'm going to take things that look to the future, right? What's happening is in all the ecosystems are now setting up their own open API frameworks. And it's not just out of the want, I think it's a necessity. Banks have gonna go from cash first to banking first to now it's technology first, right? Everything has to be technology driven. And what I see going forward is with 5G and IoT, and I know it's a very cliched terminology that people talk about, having things instantaneous for the customer is going to become very important. And with that, open banking and open APIs will play a very important role, right? Seamless integration. That's the word I would probably, or words I would use to describe what the future is going to hold. And financial services is going to be a very important part. So with the tech fins driving a huge amount of change in user behavior, I believe that the banks, as well as the fintechs who are interfacing a lot with the banks, will have to help the banks in coming to match with what the tech fins do, which is being seamless and being able to do this in a large scale, in a secure way, as we become technology first in everything we do.
Thank you so much. Thanks, Musheer, and thanks to all the panelists. Fantastic, great discussion, and I think we closed the session. We've had some very good questions. I think we also managed to answer nearly all the questions that we could. Further to this, I'm sure LinkedIn and various modes are available for people to get in touch with respective panelists. Thank you.
Thanks, Praveena. Thanks a lot.
Thank you.
Thank you.